Welcome to Harry Crypto Channel. Research Spot Bitcoin ETF and its impact on BTC. Recently, the approval of the Spot Bitcoin ETF has become a focal point of attention within the cryptocurrency community, significantly impacting market prices. What exactly is a Bitcoin ETF? A Bitcoin ETF, or Bitcoin Exchange Traded Fund, is a collection of assets related to the price of BTC that companies purchase, securitize, and trade on traditional exchanges instead of cryptocurrency exchanges. The purpose of a Bitcoin ETF is to provide retail investors and those unwilling to directly own cryptocurrencies with access to Bitcoin. As of now, there is no Spot Bitcoin ETF in the United States, but it exists in other regions. The growing popularity of the cryptocurrency industry has enabled the issuance of Bitcoin ETFs in various countries. Notable examples include Canada, 3IQ Coinshares, Purpose Bitcoin, and CI Galaxy Bitcoin. Europe, 21 Shares Bitcoin ETF, BTC, etc. Group Physical Bitcoin, Vonek Bitcoin ETF, Iconic Funds Physical Bitcoin ETF, and Bitpanda Bitcoin etc. Brazil, QR Capital's Bitcoin ETF, WisdomTree Bitcoin. Why do investors care about Bitcoin ETFs? After understanding the basic concepts of Bitcoin ETFs, let's explore the reasons why investors might be interested in this new generation of assets. Ease of access. ETFs trade on traditional stock exchanges, making it easier for mainstream investors to buy, hold, and trade assets related to Bitcoin through their existing brokerage accounts. This accessibility is particularly appealing to investors unfamiliar with cryptocurrency exchanges or hesitant to use them. Regulatory oversight. Bitcoin ETFs are subject to regulatory oversight, providing investors with a level of protection and transparency. This regulatory supervision can help alleviate concerns about fraud and market manipulation, which may be more common in unregulated cryptocurrency markets. Portfolio diversification. Investors view Bitcoin as a potential profit diversification tool. By providing access to Bitcoin through ETFs, investors can incorporate cryptocurrency into their investment portfolios without directly owning and managing digital assets. Mainstream acceptance. The emergence of Bitcoin ETFs can be seen as a sign of mainstream acceptance, integrating cryptocurrencies into traditional financial systems. How Spot Bitcoin ETFs work. The operation of a Spot Bitcoin ETF involves several key steps. Acquisition of Bitcoin. The ETF purchases Bitcoin from other holders or through authorized cryptocurrency exchanges. Secure storage. Bitcoin is stored in digital wallets with multiple layers of security, including cold or offline storage, to mitigate risks. Issuance of ETF shares. The ETF issues shares corresponding to the amount of Bitcoin it holds. The ETF's share price should reflect the current market value of Bitcoin, and shares are publicly traded on traditional stock exchanges. The ETF may adjust its holdings by buying or selling Bitcoin. Creation and redemption process. Authorized participants, APs, often large financial institutions, facilitate the creation and redemption of ETF shares based on market demand. If ETF shares are trading at a premium or discount to the actual Bitcoin price, APs create or redeem shares in large quantities, exploiting the difference to ensure the ETF share price accurately reflects Bitcoin's price. Investing in ETFs. For investors and traders, buying a Spot Bitcoin ETF is similar to purchasing shares in any other ETF or stock. Market liquidity and efficiency are maintained by market makers, who play a crucial role in stabilizing the market, ensuring investors can easily buy or sell ETF shares when needed. To gain a better understanding, let's delve into the prepaid redeem model proposed by BlackRock to the U.S. Securities and Exchange Commission, SEC, to address concerns about price manipulation. How will the launch of Spot Bitcoin ETFs affect Bitcoin prices? This is a challenging question. To estimate how Bitcoin prices might fluctuate when Spot Bitcoin ETFs are launched, it is essential to measure supply and demand at that time. Potential demand. Before Spot Bitcoin ETFs are introduced, potential demand is an unknown variable. Estimates suggest that institutional investment channels in the U.S. could lead to significant capital inflows into Bitcoin. However, actual demand remains uncertain. Different estimates provide varying figures for potential capital flows into Bitcoin through ETFs. Galaxy estimates that, by the third year after the launch of Spot Bitcoin ETFs, the total inflow could reach $38.06 billion. Glassnode's estimates differ, suggesting a potential capital inflow of $70.05 billion into Bitcoin from two main sources, equity and bond ETF markets, and the gold market. Given these estimates, Glassnode also models the impact of new capital flowing into Bitcoin on its market capitalization. In the long term, the ratio of new capital to changes in Bitcoin's market capitalization is expected to range between 0.25 and 0.35. With a potential capital inflow of $70.05 billion, this could result in Bitcoin's market capitalization increasing to approximately $200 billion to $282 billion. Potential supply. The potential supply entering the market depends on various factors, especially the profit margins of current Bitcoin holders at that time. Additionally, the conversion of Grayscale Bitcoin Trust, GBTC, into Spot Bitcoin ETFs, if approved, could also impact supply. GBTC is currently the largest Bitcoin fund, holding a significant portion of the total Bitcoin supply. The conversion of GBTC into ETFs could lead existing GBTC holders to become ETF holders, potentially influencing Bitcoin prices indirectly. However, predicting the actions of these holders post-conversion is challenging. Investors who bought GBTC at a significant discount may choose to sell once it becomes an ETF. Digital Currency Group, DCG, the parent company of Grayscale, which owns approximately 10% of GBTC, might also consider selling ETF shares after conversion. In summary, potential demand for spot Bitcoin ETFs appears to outweigh potential supply, potentially positively impacting Bitcoin prices. However, these are estimations, and actual market outcomes remain unpredictable. Contribution to overall market liquidity. Spot Bitcoin ETFs have the potential to enhance market liquidity by providing more buyers and sellers. Higher liquidity can lead to greater price stability, making Bitcoin more attractive to conventional investors. Currently, various Bitcoin funds, including ETFs, hold a significant portion of the total circulating Bitcoin supply, showcasing their substantial presence in the market.